Welcome to Fintech Chatter, presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Hello and welcome to Fintech Chatter, the show for everything fintech down under. I'm your host, Dexter Cousins, and today I'm joined by a guest who is making her Fintech Chatter debut. It's Ada Guan from Rich Data Co. Ada, welcome to your Fintech Chatter debut.
Thank you, Dexter. So glad to be here.
It's fantastic to have you here. It's an incredible story. We were just chatting before off air how I think I tried to headhunt you in 2012 when you were at Westpac, and here we are 11 years later and you're a co-founder of a successful fintech business. But before we kind of get into today's show, would you mind telling our listeners a bit about Rich Data Co. and what you do?
Yeah, of course. So Rich Data Co., we call it RDC, is about 8 years old. So we've been in existence for about 8 years. And we provide AI decisioning platform to lenders, and largely in the business lending and the commercial lending space. So our goal is really providing the AI decisioning capability and helps the lenders to make higher quality decisions safely and more efficiently.
So an AI business that's 8 years old, that would kind of make you a dinosaur in today's terms. Is that right?
I know. And now, if you talk to any business, it's an AI business, right? So the thing we're super proud of is we started really applying AI for lending 8 years ago.
Yeah.
So our first customer is out of North America, and we start to really making lending decisions using their data 8 years ago. So we have some experience, which is great.
Now, I'm quite excited about this show and this interview, Ada. And the reason why is that today we're actually celebrating, I think, the 4th anniversary of the first episode of Fintech Chatter. And I was listening to it because I'm going to be recording a special show, kind of looking back over the last 4 years. But in that show, the part of the discussion is around how kind of fintech has really been so far, well, to that point, about improving processes and not really changing the products in any way. And one of the references that I made was that as a business owner, and just to see the way that work has evolved and changed rapidly over the last 15, 20 years, we're still using like credit decision models that are based on people who had a job for life and kind of all of these kind of factors from the 1970s, not the 2020s. So I'm really fascinated to kind of understand how Rich Data Co. is actually solving this problem and addressing it.
So let's get into a little bit details around this. So the method I think many lenders use or many banks use in terms of credit assessment are still based on methodology defined in 1950s, right? It's heavily
So
reliant.
being kind by saying 1970.
So it's been around a long time, and it has been very successful for a long time. And it's rely heavily on credit history and past behavior. And so one of the reasons we're really thinking about how to change the game and how to solve the issue is now there's so many data, so much data become available about individuals and also about business. AI technology advanced a lot in the last 70, 80 years. And can we actually solve the problem differently? Can we actually, using AI and using data, have a deeper understanding of the behavior and be able to predict, understand what the future looks like? Can we bring decisioning and AI together, help lender to make a better decision? And is perhaps the idea behind RDC, and to really thinking about how can we think of the problem differently, and can we solve it using AI, and what type of control we need to be in place, and to give that safety and compliance aspect to the lenders so they can safely use AI and in the lending space.
So I'm kind of sitting on the sidelines as a consumer complaining about this, but I know only too well that it's one thing for us to kind of say, hey, technology can make this better. But then when you get into a bank, the complexity of their technology stacks and legacy systems, etc., oftentimes you come in with a great idea and people get excited. And then the realization that how are we ever going to implement this and make it work? And, the other challenge being, if this goes wrong, am I potentially going to jail? How have you overcome those two challenges when you've been approaching banking clients?
So if you look at RDC, many of us coming from banking background and coming from large enterprise software background. So we have a solid understanding the challenge of the legacy systems and how difficult it is and what's the possible pathway to help banks to solve that issue. Perhaps it's one. And so we actually understand the pain. And we don't try to pretend the pain is not there. Often what we help banks to do is AI accelerator type of approach. So setting up an environment to help the banks to experiment, testing new ideas around AI and testing out in a control environment before we rolling that out into production. I think for many large banks, that's the right way to go, to really test out the idea, proven it can work, and before moving that into production, perhaps is one. Secondly, purely from banks' perspective, the compliance requirement is very high. It's slightly different from many fintech lenders, and the compliance requirement is not as high as banks need to do. So from designing the AI decisioning platform perspective, we focus a lot around transparency and compliance. So we have a term we use called glass box AI. So what that really means is every decision made in our platform is traceable all the way back to the data. So how the data get ingested, what type of prediction we have done, how many models was used, or the model results are explainable. And the decision itself, which is a combination of multiple models and multiple rules, is traceable all the way through. So I think we have a term called self-describing decisions. That means if the banks ever wanted to inspect one of the lending decisions they ever made, they have a chance to do that on our platform. So I think this type of design and building and investment into the platform and enable us to be able to have the ability to service the banks or fintech lenders.
And what kind of feedback have you been given from your clients as to how impactful the platform is?
You would see in some of the press release our customer have done and in the market. And I think we firmly believe it's best for our customer talking about us and versus we promoting ourselves. And so you can see the feedback is overwhelming. And in terms of the impact we have achieved, really helping large banks and innovate in the business lending space. And in a way, getting ahead of their competitors is what we've been focusing on doing.
Yeah. And do you focus purely on business lending or do you do other forms of lending as well?
So the platform itself and the core of the platform itself is helping organization to make complex business decisions using AI. So the platform itself has a lot of expandability in terms of extending into other industries. In the past, we have worked across multiple industries as well, such as retail, such as telecommunication. Currently, we're very focused on around business lending and commercial lending. And the core reason is a space is actually very difficult to solve and very difficult to get the right solution for. So we see this space we wanted to be super good at.
Yeah.
We also done consumer lending in the past. It's an area we could potentially go back to, but currently we really focus on business and commercial lending.
So if we look at the Australian fintech space, I think kind of a lot of the success stories have come in that SME lending space. You've got Judo, Prosper, a whole host of other businesses that are doing a great job. But when I look at the structure of their businesses and you look at the people within the business, they're probably about 20%, 25% tech people. And the rest are salespeople. So it's still a kind of heavily dominated kind of, human kind of centered kind of industry. What kind of, where do you see the opportunity to be able to, bring technology more into that? And does a platform like RDC, does that kind of take people out of the process or does it just help them get a better decision?
So our business is to enable the bankers, right? So in terms of, if you look at SME lending, it's perhaps the fully automated decision is possible and under a certain amount. And if you go to the commercial end, and especially about $5 million lending, and at this point in time, no one is going to rely on AI to make a decision and say, do a tick and finish. And the things we're really focusing on is the harmonized AI and human. So in a way, I haven't found the best analogy for it. It's almost providing a calculator for the bankers, if you would say. And in the days have no calculators and all the bankers need to do the calculation by hand. Is can we provide the next generation of tooling to the bankers and to help them to not just look at the past and also looking at the future, into the future, and to see what the future is actually painting out for their customers. So if I give you an example to bring this to life, so one of the core thing we do, especially for SME businesses, is we do cash flow forecast. So we're predicting their cash flow strength over the next 12 months. So when the bankers examine how that SME business is doing, they could look at the cash flow strength of that business over 12 months, because business often have seasonality. So if I give you an example, if the cash balance continue to dropping, very likely that business will start to run into issues. The banker actually needs to have a conversation with the business owner, say, what's going on, Dexter? Are you okay? And on the other side, if let's say a retail business, in December, you see the cash flow continue to drop, but picking up prediction-wise, picking up in January, February, that's a fantastic lending opportunity. The bankers should have a conversation with that business, say, Dexter, can I help you out? It looks like you need some cash to buy stock for Christmas. Can I help you out? Do you need to buy more stock in order to grow your business so you can come back stronger in January and February? So what AI really is doing is start to provide that insight for the bankers to look into the future in terms of their business customers, and they can have much more meaningful and insightful conversation with the customers. And that's how the banker is to enable the bankers, and it's not replacing the bankers, it's making the bankers' life better.
One of the things that really frustrates me about the recruitment industry, or just recruitment in general, is this kind of the way in which hires are done, particularly through jobs and job advertising. And to me, it doesn't make any sense that I would pay to advertise my brand, get hundreds, if not thousands of people to spend the time applying and then reject them and say, I'm not interested in you. It's really bad for brand. And I've seen a lot of lending businesses follow that approach as well, where they've kind of almost given a bad, experience to people who could be customers in the future. Is there? Do you see a kind of time, or is it possible through the RDC platform that if, let's say, for example, my business, I go for a loan and I want $2 million, and it comes back no, is there then alternatives of, hey, here's what we can offer, here's how we can structure it, here's kind of how we could make actually the deal work around different scenarios?
100%. I think if you're really thinking about what an ideal lending situation is for the customer, is you have the credit available to you when you need it, where you need it, and how you need it, right? So if I design the whole lending product around the customer, that will be how I design it. And then from AI perspective, can I use AI to understand your needs better, and to make sure the credit which tailor to your needs is actually available before you even thinking about it, is where we're driving towards. And it is here now, and we're helping major banks doing that now, and really looking at the existing customer portfolio and to see how to optimize the offer to existing customers. Because the frustration is, if you are existing customers, I have all your data, I understand you, I have a relationship with you from a bank perspective. I should know when to offer credit to you, at what time and in what format, and enable banker to have a very meaningful conversation with you. And that's the things we're focusing on.
So I'm really interested to kind of dig a bit deeper into the actual business itself. So you mentioned you're 8 years old. As I kind of rocked up to reception, I think the first thing I mentioned was, hey, it's noisy in here. It is Melbourne Cup Day. So, but it was quite, particularly over the last few years, you've kind of forgotten that offices can be noisy places. How many people do you have in the business now?
We have about 60 people in the business. And office-wise, one thing I'm super excited around RDC office is always have a fantastic energy.
Yeah.
And so whenever I have a tough day, actually I come into the office, always buzzing and people laughing, joking and playing and it's just a fantastic place to be.
And in terms of the people, are you all technologists? Do you have kind of what's the mix of kind of skills and backgrounds?
We have, so one of our culture principles is around diversity. We have a very diverse workforce and largely categorized by two types of people. One is we call them young guns. So the very young kids, fresh out of school, full of ambition, full of energy. I think you saw some of them out there. And there's another generation, it's more like what we call the corporate warriors. So being around the corporate for a while and done quite well and felt there's more in their career and then working in large corporate. They wanted to try something different. So we also have a group of people like that. So we normally have the young guns and the corporate warriors and in RDC.
Yeah. And with you being an AI business, are you kind of predominantly data scientists or?
We mainly engineer and data scientists. We have a very, very thin sales and marketing team. So we have 2 sales guys, 0 marketing. And so everyone else is almost or either expertise in credit or in banking or engineers or data scientists or data engineers.
So, kind of marketing and sales are pivotal to growth, and yet with only 3 people in those functions, 2 people, you've managed to bring on some really big clients and big names, not just here in Australia but globally. So how have you done that?
I think one is the product is good. And so the platform itself, sometimes it's quite amusing, right? And if you're talking about AI decision business out of Sydney and relatively unknown, RDC is not very well known, I think, overall. And not out of Silicon Valley and not out of East Coast of US. And so we relatively unknown and internationally. And the platform itself is good. People are good. So we have people who has very deep domain expertise and who can really make it work. I think every bit of business we earn it. So by delivering results to the business and then the customer become the advocacy of what we do. And I think that's how we have done so far. But we will grow our sales team. It's a process we're going through.
And how on earth have you managed to hire then what I'm assuming is at least 57 data scientists and engineers?
Talent attracts talents, right? So it's the RDC team, I work in large banks, large technology companies. I would say RDC have one of the strongest team in the industry. And the core reason for that is there's a bunch of people come together and they have huge ambitions, huge talents. They want to do something different. So I think one of the things we keep talking about at the very early days is saying it's a bunch of interesting people to do interesting things which are impactful. Is what we're driving. And so you have people truly passionate about the business, and then good people bring good people. Talent attracts talents. People don't come into organization, work for organization. They come in work for people.
Yeah, look, there's a saying I think which is A team people attract A team people. B team people attract C and D and D. Yeah, and I think it's it is true, and it might sound a little bit kind of being a bit of a talent snob, but I think the reality is you have to get it right in a business of this size. There's just nowhere to hide.
100%. I think people, especially I felt, especially in startup, people will decide how successful you can be. So one thing we often say is the limitation of any startup such as RDC is how good the people are. And how good we are as not just individuals, as a team, and how much we can push the boundaries as a team, how we hold each other accountable, how to pushing each other up as a team will decide how far we'll go. It's actually nothing else. And the product comes because people is good. Customer comes because people is good. So people is core of our business.
And unfortunately, what I see, Ada, is kind of it's actually flipped in reality for most of the industry, in that most of the emphasis, whilst they say people are our number one asset, most of the emphasis from founders, and you've only got to go and go to an event or look online, it's all about raising capital. And the reality is that kind of if you focus on getting the right people, all of those things kind of will
come into play
naturally. Whereas I think founders tend to put all of their energy and focus in trying to make that work, rather than trying to bring in the right people and build the right product. And then, as you pointed out with one of the examples of how the platform works, if you got sales booming, that's the time everybody wants to lend you money, right? When you need it, nobody wants to lend it to you, right?
Exactly.
So I think that kind of kind of approach that you've got around the people and the product, it's great to see that it's actually now, with a team of 2 salespeople that you're able to go and win all these great customers.
Yeah, absolutely. I think from investor perspective, we've been talking to many investors, like many staffs. Fundamentally, I felt investors wanted to invest in good business. And so if we look at boil down to, and it's really solid business, and especially in the current environment, that's where investors focusing on. Then what do they assess? They assess how good people are is the number one criteria. And so our investors are always amazed on how good our team are. And so number one, before anything else, then they look at product to market fit. They're looking at your revenue, at your growth trajectory and all that. But the first gate is actually people. So if you want capital, get a team right. It's so important.
Yeah. I want to talk about your journey. It's kind of, I think one of the privileges that I've got in my kind of space that I work in is there are people who I've got on the podcast who, like yourself, I used to headhunt 15 years ago, and they were coming out of a Big Four firm, and that was where I would go and get first time CA passes. And what was really interesting was, having recruited initially kind of finance and risk, was to see kind of post GFC how finance and risk morphed into strategy and morphed into data and all of these other areas where people in my network now have gone off and just wanted to solve these problems. And, it kind of was a natural progression for me. People say, oh, how did you kind of figure out that fintech was going to be a thing? Well, I just followed my network. I just followed the people that I really believed in, that I'd kind of worked with previously and were clients or candidates, and seen where they were going and thought, well, this must be something. What's your journey been like? Because I think when we spoke, you were in data at Westpac, you then moved to Oracle, and here you're talking to a businesswoman about raising capital, about people, about your kind of cost to serve and all these cash flow models. And how have you made that transition to go from being an employee at a huge organization like Oracle to being a founder, and all of the challenges that come with that?
Yeah, I mean, being a founder, doing startup, perhaps is the most difficult thing I ever done, and also the most fulfilling thing I ever done. So it was not an easy transition. I think my career history has always been in large corporate, right? So I have a Woolies history and a banking history and Oracle history. And so very safe, and different industries, quite fun to be in as well. They're all fantastic organizations. I learn a lot. And making that change from a very large organization such as Oracle, I think at the time it's 120,000 people, right? And into a startup, because I think we have a story around 7 people, 3 chairs when we first started. So it has 3 chairs for 3 months. And it's a massive transition. The core reason for doing that is that corporate warrior story, right? So I keep wondering, are there more? And if I don't make the change then, and I probably never would. Yeah. And I think a lot of my mentors at the time actually really guided me as well, say, what's there to lose? Go have a try. You can always come back to large corporate. And if it's not successful, and go give a try, and don't let something you look back and you regret it, say, I wish I have done that. Yeah. So I think it's just, I think people doing startup are a little bit crazy and a little bit adventure driven. So I think I have that I believe, in my blood, and I wanted to take a chance. I wanted to take a risk, wanted to see how that goes. And that perhaps is what driven me taking the chance.
One of the startling kind of stats from the research and data that I've collected over, the 8 years that I've been in business with tier one people is when we've looked at people who've made the move from a large corporate to a fintech startup. And by a startup, I'm talking about a business that's under 100 people.
Yeah.
90% who've made the move leave within the first 6 months. And it sounds a bit shocking, but I think once you've been in the environment and you've experienced both environments, it's really kind of, it's a lot clearer as to why it doesn't work for a lot of people.
Yeah.
What were the things that you had to change about yourself pretty quickly when you kind of made that leap?
I think one is, can I just say, for the stats, it's not shocking, and a startup is not suitable for everyone, and it is tough. And so it's not something everyone has to do. I think it's suitable for certain people, especially from a recruitment perspective. We're actually very conscious, and it might not be suitable for very talented, some part of the very talented population, but very suitable for the other population. And some of those attributes is actually that adventure taking attributes, personality trait. And there are people who are more willing to take a risk and see how it goes.
We're going a little bit off tangent here, but I remember speaking to a friend of mine who's an old client. We were having a walk, I think a year and a half or so ago, and he's from the UK as well. And we were just talking about this thing around the kind of risk-taking and entrepreneurial spirit. And he referenced some research that he'd read where there's apparently genetically 10% of the population, it's coded in to the 10% of the population genetically. And that's how we actually spread from, if the origins of humanity are Ethiopia, just that you kind of had to go off an adventure and seek it. And if we didn't have that 10% of the population, we would all be kind of still in North Africa, right? So the whole thing around innovation, and entrepreneurship, it seems like there's kind of 10% of the population predisposed to it. And then you mentioned that when I was talking about this 90% number that we'd come up with from our data. So it's kind of fascinating that, I don't know if it's just we're all kind of making this bias towards it, but it's quite fascinating when you speak to so many people.
Yeah, because we've been in business for 8 years. I'll come back to the changes, but being in business for 8 years, we interview a lot of people, we hire a lot of people, and then you're looking at the attributes. It's really one thing we joke about in RDC is quite a few of us go rock climbing on a weekly basis. We actually say perhaps one of the recruitment thing we need to do is get the person do a rock climbing lesson. I think HR is telling me the insurance might be an issue, but
my son who's 11, I take him bouldering every Friday, and he's done rugby league, soccer, cricket, and it's the one thing that he has stuck at. He's committed to everything, but he's after a season or 2 seasons, he's said, "Hey, it's not for me. This is the one thing." And I asked him, and I said, "Hey, what is it about bouldering and rock climbing that you love?" And he said, "It's about problem solving." This is an 11-year-old kid, right? I was like, oh, wow.
Because in terms of climbing, and you need to do a few things, right? You need to be physically fit, and that's base. Second, because there are so many different tracks, you have to use your brain. It's a mental game. You're also dealing with your fear of failure. Because you fall, you could easily fall. You need to rely on your partner and make sure that person actually holding you up, and then you're taking a calculated risk constantly, because otherwise you can't go up the hard course. And then at that point you figure out, am I taking that risk or not taking that risk? If I take that risk, I get to that point. Can I go to the next point? Or that's a dead road. And so in many ways, it's very, very similar to entrepreneur journey, and in terms of how you go up.
I've actually used that same kind of metaphor, except, climbing Everest, but using that as, how people should look at their careers now. It's not a linear path.
Yeah.
There's not a ladder going straight to the top.
No.
There's no ladder to success. Yeah, you're zigzagging, you're going up. Sometimes you're going to have to go down, move across, but then there's a faster route to get to where you want to go, or a safer route. So I think your idea about doing rock climbing as part of an assessment, I don't think is necessarily a crazy idea.
Especially for staff, because it's such go back to your question before around what I need to change. So if you're thinking about large organizations, you have a lot of safety in it. Yeah. You don't need to worry about payroll. You don't need to worry about tax. You don't need to worry about HR hiring process. There's a ton of safety net around you. So you do what you do it well. But you don't need to worry about a whole bunch of other stuff which is surrounding a business. The biggest adjustment I would have to make is suddenly that's become a responsibility. Yeah. And suddenly need to figure out how to even set up an accounting system when we first started and who is going to be minding that and what type of control we need to put in place. So a lot of business related capability.
I'm smiling, right? Because I remember when I launched Tier 1 People and I went through exactly that same thing. And I was really fortunate in that I think the first 3 or 4 weeks, I actually got my first bit of business, right? Yeah. And I was planning it might take 6 months. And I was celebrating. And I was like, yes. And then the first thing that hit my head was, how do I send an invoice? I don't have a system. And I had to reverse engineer and I called an accountant and we set up Xero. Yeah. But I think every process that I had in that business was reverse engineered. And it kind of, I think the only time that I actually felt like that, well, twice, was when I first moved to Australia and when I first became a parent. Yeah. And it was just, everything was so alien. And it was like, I really do not know what I'm doing here. I'm just making this up as I go along.
I think that's the time you really grow as a person because when you're most uncomfortable, you grow as a person, right? So when you throw into that situation, you kind of like, okay, I somehow just need to make it work. And then I think that's when a team are super important. So have a team supporting you and building that out becomes super important.
If you looked at the two environments, one of the things that I'm really kind of fascinated by at the moment is, and I don't know if it's necessarily true or whether it's just kind of media talk, is this talk of the kind of burnout pandemic that we're going through. And I really struggle to understand because I look at the way in which our lives are now structured, working from home. We've never had it better. If we were here 2019 and I said, hey, Ada, in the next few years, people are going to be in the office once or twice a week and they're going to be burned out. You would have said, what are you talking about, right? Like, what are you talking about? You've experienced a corporate career. Yeah. You've experienced a startup career. Which of the two do you think would more likely lead to burnout for you?
I think it's very individual, business based, and instead of category. So because if I talk about RDC is a startup, right? Yeah. So the pressure is high at any point in time, and for us, it's a survival pressure versus large corporate. And so one thing we actually very consciously put in place is a culture principle we call a culture key. And it's actually to exactly avoiding that issue is to say, we want you to look after yourself first, your loved one next, and then RDC. So the business will be here. But if you're not healthy, you're not strong, you're not well, you're not going to be helpful for anyone. Yeah. If your family or your loved ones are in stress, you're not going to be helpful for everyone. Yeah. And so go sort out the base stuff first. Yeah. And then let's make RDC work. So I think this type of supportive structure are important in the current world. Working from home, yes, you have a better chance of perhaps doing some of the school duties and balancing it off, but also means the work actually seep into your life. Yeah. It's hard to turn off. Yeah. People are online all the time. It's hard to draw that boundary between work and the personal life. And it's one thing. And the second, people are social animals. We wanted the energy and the interaction with people, and we're enjoying making that human connections, and human and social connections. The other factor I think are super important to avoid burnout. We need support, we need connections, we need to feel be part of a group. So I think working from home, there are some benefits. There's a lot of drawbacks as well. So how to balance that, I think, is all the business trying to figure out.
Yeah. So this is just a beautiful transition into the next thing that I wanted to talk to you about. This isn't the first AI hype cycle. There was another one in 2016. They kind of seem to come every 7 years, right? El Nino. It's like the AI hype cycle. But the conversation in 2016 was heavily focused around ethics and AI. It hasn't been as much so this time. I think it's more been around the kind of Terminator, blowing up the world. Kind of Armageddon talk. Where do you see the opportunities for AI, and where do you see the dangers, and what do you think kind of needs to happen around regulation?
Couple of things, right? So the AI, especially generative AI change we saw in the last, it's not that long ago, it's less than a year. And what really means is now everybody, and no matter taxi drivers or delivery drivers, everyone can talk about AI. And any conversation, sitting in a taxi or Uber, everyone was talking about AI, right? So in that sense, it's similar to internet, similar to iPhone become available. Everyone suddenly have a different experience, and everyone has an opinion about it. And that perhaps is the key difference in 2016. And it's still a very remote idea, and people can't relate to it, can't touch it, can't feel it. And now we can. And the key thing I felt are important is there is a lot of, if you look at AI industry, there are two main layers. The infrastructure layer, which are largely played by large players, and the Google, the Amazon, the Microsoft, the OpenAI. So they play well in that space. They provide a foundation and infrastructure layer. And then I think we start to see in different industry, the application of AI started to boom. And in self-driving cars, in health, in banking, so multiple industry applications started to appear. The biggest test, I think, over the next few years is really how much benefit AI can really deliver to each of the industries. And can we save money? Can we deliver more revenue? Can we benefit people and deliver impact? And what's the benefit AI can really deliver, I think, would be the true test case. Are we doing things smarter, faster, more efficiently? And it's the test I think we're facing, each of the AI businesses facing. Can you deliver true benefit to the end customers? And in terms of safety and all that are super important, and compliance, especially for specific industries. I think Australian government's risk-based approach actually I'm super supportive of. And there are some no-brainer AI applications. We should just do it. And it's similar to have a faster computer, and you wouldn't hesitate, and you just go do it. The higher risk one need more thought through, and in terms of how to do it. In the financial services or in the banking industry we are operating in, there is actually a whole bunch of model governance framework being in existence for long time. And banks should just continue to use it and apply that into AI, and to control the usage of AI into different areas, especially core areas. I think we need to treat different industries slightly differently. And there's no reason to be fearful of AI as well. AI is just a technology. It's an enabler. And it's around how we can best use the enabler to do more good. And it's the key thing. And the right regulation will support the growth of AI and deliver benefit. The regulation too tight could kill AI, and we won't benefit from the power of the capability. I think it's a fine balance there.
I often say to people that one of the reasons why I love recruiting in fintech is the level of complexity. Unlike kind of other kind of startup and tech areas, you can't kind of apply the mantra of move fast and break things. You got to move fast with precision. If you break things, you usually end up in jail, right? Like FTX. Right? So I guess the question I've got for you is that, given that you're in fintech and you're in AI, how complex is it for you, and kind of how narrow are the guidelines that you've got to operate in, and how do you actually innovate in such narrow guidelines?
So our customer are mainly banks, right? So, and we in the lending decisioning space, which is a space quite heavily regulated and controlled. So in that sense, we tend to work very closely with banks in order to do that. And our model is really how do we become an extension of banks' technology team and also credit team and the risk team, and how to enable them within the current control, because some of the control are absolutely needed.
Yeah.
And how do we design a platform actually has that capability to make the compliance easier, to give people the confidence on using AI safely. So we're thinking through that quite deeply and working quite closely with banks to do that, because otherwise they can't, no matter how good the AI is, they can't use it. If you can't use it, there's no use. And so that control and the compliance is there for a reason. So for us, we're actually working with it than working against it.
So Ada, it's been fantastic to hear about the last 8 years. What does the next 8 years have in store for RDC?
For us, it's now we have a solid product, we have a solid team, and the next 8 years is all around growth. And so you might have seen we have entered the North America market and through a very strong partner, nCino, so who is a super successful fintech in the global market. They're providing lending operating system currently to 1,700 banks globally. So we have signed an agreement with nCino for them to distribute our product globally. So super excited to enter the market with them, and we will focusing around building more partnership like that and continue to grow into different markets.
Brilliant. And we get some amazing talent listening to the show. If they're interested in potentially a career at RDC, where's the best place for them to find out about any open vacancies you've got or to reach out?
Yeah, I believe we have a career link on our website, and we're quite active on LinkedIn as well. So feel free to follow us on LinkedIn and reach out from the website. And we are recruiting quite heavily, and we're aiming to adding about 30 people to RDC over the next 12 months. So we are growing quite significantly, especially in the US market and also in the Australia market. So yeah, do reach out, and we are continue to look for interesting people and continue to look for interesting people to work on interesting things.
Brilliant. Well, thanks for joining me, Ada. And thanks for listening, folks. If you're new to the show, make sure to follow us on your favorite podcast player and leave us a review. And if you're coming back, thanks so much for your support. It really does mean a lot to me. You can follow me on LinkedIn. And until the next episode, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures, and you can find us at tier1people.com.